Good evening, everybody. Still here. It's Friday, believe it or not, December 13th. So, Friday the 13th here. Stocks were quiet, lower volume today, a little bit of a pause. A little bit of selling we had early in the week, then it just kind of slowed it down a little bit. We'll look at the charts to get a better glimpse of this. We did lose some distribution days once again. We're down to 6 and 5 now in the S&P and Nasdaq respectively. Everything's still closed below the 8 moving average, so it's lighter on that. The load's a little lighter on the distribution days, but um, I don't know. I don't know. Let's go take a look. All right, the Dow, you see the sell-off. We had 3 consecutive days to the downside, and then we had a little bit of a pause. So when you have selling like this, of course, the candles were pretty large. At some point, there's going to be a pause. I mean, it comes with the territory. So to see a bullish hot on me here means not so much a bullish reversal as much as it means more of a slowing down of selling. Let's put it that way. Now, to make this bullish, you'd need a big green candle on Monday, and that would make it a morning star. That would help. The bulls certainly is position, but obviously the 8 moving average is crossed below the 20. The 20 is now flattening. Now we're stuck between moving averages. Generally, things can get a little choppy in here. The highs are going lower, the lows are going lower. So currently, this shorter term going possibly into an intermediate trend is to the downside for now. It is oversold, as you can see from the stochastics, but that doesn't necessarily mean that the selling has to stop here. But we'll see how it goes. It's at the top of the channel. Will they bring it back up? This is an interesting place to negotiate to see if they will back bounce or not. I thought really if they were going to bounce this at all, they needed to do this with a fair amount of vigor, and they just didn't. I just really thought the bulls were going to step in. They're going to step in, and they never did. So I'm thinking there's still the likelihood of more downside, but we'll see. Breaks below the lows of today and Thursday, and then of course, yeah, you're clearly going lower, at least temporarily. So let's go look at the S&P. So 4 red candles, 3 of course to the downside with new lows. Today's not so much, gapped higher on the open and faded, but it's holding this 1775 and it's hanging on as hard as it possibly can. So once again, the candles are getting smaller in size the last 3 days, from large to smaller to even smaller today. So you'd expect a bounce similar to what we saw in the Dow. So plus at this 1775 area, there's support here. The 50-day moving average is near proximity. Bollinger Bands are opening, so volatility has picked up. So does that mean we're going to go lower? Well, a little bounce could be happening, and then the possible flush, or they take this all the way back up again, back to 1810. It's not clear, but right now support is here, and you have to wait to see what it's going to do. That's the bottom line. Nasdaq. Nasdaq, same thing. Gapped higher on the open today under the 8 moving average. The 20 is still rising. The 8's declining. The 50, of course, still rising as well. And holding at 4,000, very key psychological number. 4,000 is going to be important. Let's see what they do. There's room still to the 50-day moving average, 39.25. And kind of unclear, but certainly all the spinning top doji-like formations at the top of the bearish engulfing still going to give from pure candle formations, the fact that there's resistance kind of gives you the notion that there's more selling to come. The targets have not been hit, and until you see a buy signal, you remain more so on the short side. So that's why. I don't see the NASDAQ showing a whole lot of strength here other than just trying to hang on. Let's go look at the TSX for the Canadian friends. And here we see the sharp decline. And then we saw a little bit of a pause, a little bit of a rejection yesterday, that lower shadow, and then again, same thing today. Kind of just a little bit of a pause here, holding that lower Bollinger Band. There's a little bit of a trend, of course, and channel to the downside. All the series of lows are coming down this way, like that, you see. So there's a little bit of a trend coming down that way, naturally. The highs coincide with that, so it could have bounced higher? Of course it could. Absolutely could. But now the 8's crossing below the 50. The 50 is going to start flattening. The trend's getting weaker and weaker because the 20 is now rolling over, and it's pointing down. So a little bit of a bounce back toward 13,200 would make sense, and then after that, it's hard to say. They could really start to crash. So watch for some of that. Let's look at the U.S. dollar, Canadian dollar, because it was doing fairly well for a while. Faded back into the 20-day moving average. 105.50 to 106 area, bounced yesterday. Made a new high today, but then faded all the way back to retest support once again to 20. So we'll look to see this to maybe bounce again, or if it starts to fail and certainly get below yesterday's bullish engulfing low, then its next target below is 105 on this one. Treasuries were alive and well today. So um, if you recall, I had mentioned this formation to me was not really a true classic reversal signal. So it had a nice push into and breaking out of the trendline resistance, but getting into a pivot area as well as the 20-day moving average, and it started to fade for a couple of days, but slowed down yesterday substantially. And I'm pretty sure I said that to me everything still kind of looked on the bullish side, that it would make sense that this could come back down and retest this whole area in here, and then to see and look for a possible bounce. Well, here it is. It bounced today, bullish engulfing again. So it's just right at resistance still where the trend line was, with room to go higher, of course. But now it's tested 129. Now it's back in, moving higher, back toward 130. So 130 is the target. 131 would be another logical target as well, all the way to 132. So it looks good still on the long side. We'll see if Treasuries can actually break this trend or not. The Japanese yen was also looking bullish off the support area, bounced with a bull sash, then a bullish engulfing several days later. I was a little surprised to see it fade yesterday like it did, but it held reasonably well today. Not great, not very bullish. I mean, it needs a real strong confirmation at this point to get back and close over the 8 and over these recent highs for the last 3 days. So if you can do that, then it's very strong and bullish at that point, and probably rocking. But others are skeptical, thinking that the yen is really about to collapse and drop quite a few points to the downside. We'll see if that's the case. Let's see what gold did. So gold, after a nice bounce of the Morningstar formation, which was quite bullish, and a retest for 2 days thereafter, aggressively moved in and above the 20-day moving average. So it went from 1210 into the 1260 area after breaking 1250 as a resistance, came all the way back screaming yesterday to retest, just like we saw the yen do. Treasuries somewhat as well, with a little bit of a bounce today. Not super bullish, but at least holding above 1220. And still looking for a move above 1250 once again, and 1265. So let's skip right on over to crude. So crude came up and tested $99, and then faded on a dark cloud cover a couple days back on Wednesday. Thursday pause. It was right across that support area that I mentioned yesterday. You can see that line I drew. Series of lows across this 97.25 area, and it faded today. So my expectation was this is going to drop into 96.50ish, which was the 618 retracement, and possibly as low as 96, where the 50% retracement was. And it did almost both, but it's definitely the 618 has been tagged, the 50% almost tagged, so it's still possible this could flush down and in reverse. I'm looking for a bounce in this area as the 20 is rising, the 8 moving average is up there as well, near the 50 now. So I'm looking for this 20-day moving average as well as the retracement levels to hold, and look for a bounce on crude. All right, let's look at let's jump right into small caps, because small caps is risk on. So if there's anything that's going to be looking like risk on, then we're going to see it in small caps. And right now, of course, it's flushed below the channel area. It fell into the 50-day moving average. Yesterday, bullish Hadami essentially telling us that maybe the selling has slowed down or stopped. A little bit of a bump up today. Nothing real bullish, nothing real astronomically great here. But the test would be the 8 moving average, the 20, as well as the 111.50 area, as well as that would coincide with the pivot area at 111.45. It would also coincide with the trend line. So there's a lot of resistance up here at 111.40 to 111.55-ish, even as high as maybe 112. There's a lot of resistance there. So we'll see what they do. If this risk on is truly going to be risk on, they're going to be buying and being bullish again. This has to get back through 112 and back inside the channel. Stranger things have happened. IYT, the transports continue to be in that flag-like formation to the downside, up, down, and then a little bit of a bounce the last couple of days. But again, change of polarity across 127.50, and that's where it hits right now. There's an 8 moving average across below the 20. The 8 moving average is declining, of course, as well. So again, a fair amount of moderate resistance here at this 127.50 area. So watch this carefully as well. Retail is another that we need to look at. Retail's been just literally hanging on to that level right there, that horizontal red line you see there. That is right at $60, right? Exactly. So it's holding on to that psychologically round number. A little bit of a positive divergence, maybe, if one would be, you believe that, but it's a very short term one. It's not much there. So we'll see what it does with it, certainly. But obviously, all the trends are still up. The 50 is still rising naturally, but now see the 8's cross below the 20. The 20 is starting to roll over, so some of these trends are getting weaker. And the 50 is all that's left to try to hang on to this trend. SMH, but RTH sort of looks a lot like a muffin top. So falling off the roof here with SMH came up on a rising window and then just accelerated its selling. So we went up 2 days in a row, profit taking with two spinning tops, and all of a sudden, boom, 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 the selling accelerated from one day to the next day to the next day, and then gapped up on the open today, and then faded with a new low and a new lower close as well. But it's into the 50 with a trend line formed here as well. Let me get rid of this. Let me do this here. That's not what I wanted. I wanted this, like that. That's what I really wanted. Let's see if that works now. Yeah, those are the series of lows. There's your ascending triangular formation of the SMH, and it broke through temporarily. Now you're at support with the 50 and the trend line, so that should hold. So I'd be looking for a bounce here, and maybe as high as 41.50 initially. Let's see what they can do there with SMH. Let's go right over to the VIX. The VIX, in my opinion, I thought the VIX was poised to go higher. Let me fix this for you here. It just kind of all messed up here. There we go. I thought it was poised to still go higher. It held on Wednesday right under the Bollinger Band. Yesterday pierced it temporarily and closed right below it. It was essentially testing the 1550 area to 16. And I still thought, quite frankly, that the VIX could go higher. Now, it gapped lower and then reversed. Closed higher than yesterday, but it has not made a new high. But right now, 1550 to 16 is kind of a little bit of a minor resistance area. You can see that red zone of 16 to 18. It's a little bit of a hiccup area where it may kind of struggle potentially. Target now is 18, and then as high as 21, but 18 initially. And we'll see what it can do there. So that's it. Very good. I hope that helps. Weekend upon us. Next week we have the Fed. Of course, meetings are Tuesdays and Wednesdays. There's a possibility they're talking about of the tapering. Let me show you a couple more charts, two more charts, and then we're done. First, I want to show you this one here, and this is the put-call ratio. I think I've shown this one before. So the blue at the top is a 5-day moving average. And when it gets to the very top above 1, then you know there's been the selling is beyond control, and at that point you're looking for maybe a final flush in this zone with then a reversal, and the market's now resuming an uptrend. When it comes all the way back down toward 0.7 to 0.75, now you know that the markets are getting a little toppy. So it came down pretty aggressively, it bounced, came all the way down, bounced, and so you see the series of highs are getting lower and lower and lower. If you go back historically, it's never really lived down here very long, but when it gets down to this area, as you can see, there's usually a topping formation every time. And here it is here, topped, kind of faded. This is, the highs are getting lower and lower and lower. This is where the rollover occurred. Now all the highs are not really making much new highs again. And then you have the bottom formation. So anyway, so that's what I'm looking for here is the fact that this is starting to form a rounded bottom, which then likely that the indexes will start forming a rounded top. Meanwhile, the VIX starts to get aggressive. It starts to show signs of life. So when it spikes and peaks, and we also see the put-call ratio above 1, then we know that the market's likely bottomed out. So has it bottomed out yet? Well, it could, everything could just kind of stay like this for a long time, and the markets could just kind of keep grinding higher. When the real top is in, then we'll have a better idea. But certainly, this whole scenario here is much more easily read for bottoms than it is tops, quite frankly. So we'll ultimately be waiting for the bottom, and then we'll be able to read that a lot better. Right now, it's the top that we're trying to figure out. So one last one. Okay, a monthly chart here of what's called a ZQ, and there's a contract month, but I don't know the exact month right now. But that's why I just kind of do a continuous contract version. But this is the Fed Fund futures, the 30-year Fed Fund futures. I say that 1,000 times in a row. Um, and this is where if you see a rollover and a decline, a drop in this, then you know inflation is picking up, and that's more likely when you'd start to see the Fed truly tapering because inflation has finally kicked in. We're not seeing any of that right now. This is almost we're still rising and not declining. So I don't know. They're saying the tapering may start. There's no sign of inflation yet, so I'm not sure why they would do it. And if they do it, it might fail. But I don't know. I don't understand that stuff that well. But I'm just looking at correlations. Okay. Enjoy your weekend. I'll catch up next week.